Welcome back, Peter.
Hi Dale, how you doing?
I'm doing pretty good. Was looking forward to talking to you, and I'd like to open it up with on a prior interview you did on Real Vision. You said the Fed was in a cage, I mean a box. So
Yes.
why don't you explain to everyone here what you mean by the Fed being in a box?
Well, let's be clear that they put themselves in the box and now are having a difficult time figuring their way out of it,
Okay,
uh, because you have inflation trajectory coming in their direction in terms of moderation. I mean, we touched 9% ish in the
right.
summer of 2022, and now we're call it 3 to 4. So the direction is in their favor, but the problem is keeping it here. The Fed, one of the things of the 1970s was it was one thing to have inflation fall, but but what didn't happen is inflation didn't stay down because we had price controls that temporarily suppressed inflation. Central banks Fed got complacent, inflation accelerated again. Inflation came back
Right.
down. So you just see like the same mistakes being played out. Jay Powell is saying we don't need to wait until inflation comes down to 2% before we cut interest rates.
Right.
Well, that's the problem with that is that the inflation battle is won when inflation comes back down to around their range, their arbitrary made up range. But the
Right.
war is not won unless it stays there. And Powell's
Exactly.
just trying to get cute here. Now, I understand what he's thinking. The unemployment rate, even though it's still historically low, is at a 2-year high. He wants to just do a little trimming well before the election. So I get what's going on in his mind, but and he sees what's happening in commercial real estate and so on and so on. But then on the other side, we should all see what's going on with financial markets and the embers of inflation on the good side potentially rising again. Look at the CRB index. Look at the CRB
Yeah.
food index in particular,
Oh, yeah.
which is really moving higher, and the raw industrial index. And you have the potential signs of manufacturing bottoming out and potential inventory restock that may start to happen, which would lift goods prices. Now, on the services side, I do expect inflation there to continue to moderate as slower rents work its way through. But I think the point being is that uh, I think Jay Powell has to be really careful here. And yeah, give him a cut here, give him a cut there. But should the market be so excited that we're going to get one or two cuts? Now, I know the market mentality is when the Fed moves, they continue on in that direction. But I think that higher interest rates for longer is not just a cliche now; it's for real. And I think that people are not appreciating that. I don't think.
Okay. So you think he'll go with a token cut in June, and do you think he's
Well,
a
it depends.
political?
There's a lot of data between now and then.
Yeah.
If oil goes to $90 between now and then, it's going to be quite tricky to him to go
Yeah,
even.
gasoline has been going up pretty good, hasn't it? Diesel
Yeah.
especially.
And
Yeah.
Raphael Bostic, who votes, said he doesn't want the first cut until the latter part of this year, and he votes.
Okay. Yeah, here's crude trying. I mean, it looks like it's, trying to come out of here, and it wouldn't take much, especially with, you know, what's happening in the Red Seas, plus shipping rates, right? Supply chain costs because of the Red Sea, for everything. Those rates are going up.
I
So,
encourage people to go back and read also the S&P Global PMI on Europe, the Eurozone, and even the UK, and read all about the price pressures that are still around. Um, Enough to tell you that inflation is far from dead. And again, while it's certainly moderated, goods prices have have moderated back to zero, and so on. But to get complacent on inflation is a big mistake. And again, too many people think that just by seeing the downside of inflation, that somehow uh, this is the end of this inflation fight. I mean, when you think about it, so inflation is going to go from 2 to 9, magically come down to 2, and just stay at 2.
yeah. So, I mean, the 70s narrative or analog would could play out, where it took three times, three
Yeah,
tightening
if
cycles.
yeah, and if we have, I mean, if we have the Fed follow through on their dovishness, at least Powell's dovishness, other members of the committee that are
Well,
clearly
doesn't
dovish.
the 10-year kind of at a very important point? This 420, Peter's been a pretty significant pivot, above it. It looks pretty bullish. Underneath it, it looks bearish. And we broke back above it last week before the Fed, and we're sitting right at 420. Is your bias, we didn't even get halfway back from this decline, which is 440. Your bias that this 440 holds and we maybe even trade 460 over the coming months?
In the next couple of months, I don't know, but I do think we're going to be retesting that 5%
Okay.
level that we saw last, call it October, early November, at
Okay.
some point. So,
Uh,
um,
so you think we'll see 6% of 5% before we see 380?
well, 380, interestingly, was where you were in July of 2023, right before the BOJ decided to widen yield curve control before obviously
Okay.
eliminating it. So that's what triggered, and I believe, the 10-year move from 3 3/4 ish to 5. So
Okay.
going back
Back
down
in.
to that 3 3/4, 380, now that the BOJ is out of negative rate policy, has eliminated the YCC, and inflation is beginning to perk up on the good side and commodity side, I do
Yeah.
not think we go back to 380
Okay. Also,
before you go to
maybe,
5.
okay. That's a firm call. And what do you think, BOJ, everyone's following every word uttered coming out of there. We're testing recent highs going back to last October. You have any kind of view on the yen?
So the yen certainly has weakened here because there's frustration that while the market got what it wanted in terms of monetary policy, I think now that you've sort of fed that, now people wonder, okay, rates are still at 0 to 0.1% on the short end,
Yeah.
and God knows when they may raise them again. So I think there was some sell in the news.
Yeah.
That what they did was well telegraphed, but I do think that the yen is an interesting buy here.
Okay.
I think that the BOJ could hike again this summer or in the fall. And while those rates are still going to remain well below the Fed, certainly, I do think that the Japanese economy, Japanese stock market has certainly done very well with it back
Yeah.
to its
Parabolic. Yeah.
highs from 1989 in nominal terms. That I think the yen is interesting here to be buying
Yeah.
in this pullback.
Okay. Maybe we have to take out the highs from 22, which we haven't done yet, 51.94
Maybe to
so
stop some
far.
people out.
Yeah. Yeah. It's kind of a stop hunt above there. That's interesting that you're calling for that. Let me ask you this, Peter. Congratulations on being a long suffering precious metal bull. Did you and the guys in your office do a cartwheel when we broke to new historic highs?
As we're long, we're happy, but
No.
after from being teased as many times as we have over the many years,
Yeah.
there's no room for complacency being a bull in precious
Yeah.
metals.
Yeah. I mean, that's a pretty powerful
Particularly
signal.
also in silver, which is still 50% from its record high.
Right. Yeah. Yeah. I think we're at, any pullback now in silver, if we get one to 23 and a half, or any
Or I should say
pullback in.
50% under its record high. So
Oh, okay.
yeah.
Yeah, and any pullback if the dollar has, another burst left to 106, which I think is possible, you got to be long. And even the miners turned, Peter. I think I'm not sure if you were buying the miners. They really
Yeah, we're long.
they had a baton death march, okay, and nice initial first wave out. So I'm telling people to prepare that if we get a pullback, some kind of fib pullback in here on any of these, even Newmont, which took away their dividend, or silver junior miners, they all look great. And if there is a pullback, to me, I think it's the last bus stop, and that's what you mean by not being complacent. And maybe even I am thinking there could be a pullback, but the market looks great.
Dale, we've
And
been doing this long enough that humility is an important characteristic.
yeah, yeah,
So,
yeah. I mean, you know, you have to respect the power of the market over the power of your decisions. So
yes.
really try and teach people that. So great call on the metals. Plenty of room to run. You're looking for maybe like 2,400, 2,500 in gold.
Well, if you inflation adjust the 1980 high of 850,
Yeah,
gold
I
would
remember
be
that.
3,200. So
Okay,
to me, 2,500, yeah, that to me that's just an easy do though.
okay, layup.
Easy in
March
parentheses.
Madness slam
Um,
dunk.
yeah, so yeah. Now technically, I know it's not going to be a straight line. To me, a lot
Yeah,
of stair stepping that's going to take place. But just take a step back and just look at how well gold has traded over the last couple of years in the
yeah.
face of most
Higher
aggressive
rate.
monetary tightening in 40 years
Yeah,
and a very sticky dollar.
yeah,
But we know why. We know central banks have been buying a hand over fist. China, in particular, China's been the biggest foreign central bank buying gold. Um, and Western investors via the ETFs have been selling nonstop, and gold keeps going up. So you draw a chart between the price of gold and ETF flows. For since existence, they pretty much followed each other up until the last couple of years when gold has continued to go higher and ETF flows have shrunk. Just imagine if the Western investor starts to get
yeah.
distracted from Bitcoin and starts looking at gold again. ETF flows combined with all that central bank buying, um, there's a lot of potential here.
And I just interviewed a mining analyst, and she said that silver is the most hated metal of people don't even want to talk about silver anymore.
It's
And
shocking the level of apathy in silver. It really is when half the demand is industrial. So we're sort of
what
putting away part of
yeah,
silver every day.
it's like someone checked my stream, posted I think a monthly. It's like in a triangle. It's like a coiled spring waiting to break out. In fact, if you just take the numbers, call this, on the weekly, get a breakout over 26, and you just measure it from the COVID low, which was, call it 12 to 30. 18 over 26 gives you 44. So that's just a measured move. Who
Well,
knows what it could do?
if you do the sort of amateurish back in the envelope gold to silver ratio average
Oh yeah, here it
going back to
is.
the 70s is about 60
Yeah,
times. And just to get back to the average, you're talking about
yeah.
$35.
Okay. I know a guy, another physical guy says before it's over, the gold silver ratio is going to be under 30. So um, very bullish silver. What do you make out of this copper breakout, Peter? Is it a sign of, maybe another sign that, economies aren't dead, um, China's not dead, and just demand for copper looks pretty good if it holds this breakout. Not as good as the precious, but is there a message in what copper did over the last 2 weeks or so?
I mean, I think it's both demand side and supply side. I mean, people want to
Yes.
talk about China for sure, but I don't think there's enough appreciation for the amount of money that India is spending on infrastructure. Uh,
Oh, okay.
the spending in infrastructure in India is extraordinary. It's in the trillions, and it's really transforming um, parts of their economy in terms of transportation and getting from point A to point B in 2 hours instead of seven by building new roads, the electricity grid. There's a lot of exciting stuff going on in India, but even in China, while a lot of copper is not being used in construction, residential construction, still getting plenty being used in just electrification of just about everything around the world. Then on the supply side, there's still continued issues. You had Panama
Yeah.
that basically
Right.
confiscated a mine that was
Yeah.
one of the bigger ones around the world. We've had talked about China over the past couple of weeks. Their smelters cutting back on purchases. So that there's the setup for much higher copper prices as well, for sure. And I think it gets back to the whole inflation discussion is that
Yeah.
commodity inflation is perking its head up again. And my theme over the past couple of years is yes, I was expecting higher inflation, which we got, but now with the dip, I'm expecting just a lot of inflation volatility. I think, like I said, we're not just going to magically go to 2 and just stay there, and we're not
Right.
going back to this tranquil period of suppressed inflation for an extended period of time. It's there's a
So
lot
then
of
you have
inflation
to,
volatility to expect.
yeah. And so you have to equate that with rates. I mean, things changed. The end of a 30-year bull market, and the worst bear market I've seen in my lifetime in bonds. They've kind of stabilized. You have a view on the longer end of the yield curve. Here's TLT. We had this rally where, to me, right now it looks like it could be correction. You think we're going to new lows, or there's another leg higher coming in bonds, which would, I mean, it could rally to 120 and still be a bear market rally from this slaughter. And
Yeah, I
what do you think?
yeah, I mean, I we can. I still think that we had a 40-year bull market in bonds after a
Right.
multi-decade bear market in bonds. I mean, bull and bear markets in bonds don't last a few years; they last a few decades in
Yeah.
trend. So
Right.
we're in a bond bear market, and we're going to see higher yields over the coming years on the long end. And if I mean the interesting day was last Wednesday when Powell was dovish, and you saw the 2-year yield go from about 467, 468 down to 460 ish, and then now we're call it four, which is where we are right now.
Right.
Responding to that dovishness, but the 10-year yield is that day did not budge, and inflation expectations actually went up to a 1-year high. If you look at the 5-year, now we backed off a little bit in the 10-year. We're now at like 422. But if the bond market thinks
This was the Fed.
that Powell
This,
is mistakenly cutting rates too soon, they're not going to like it. And if you put up a chart in the 5-year inflation break even,
I don't
and
have it.
it
Yeah.
went up when Powell got dovish. So
Okay.
this is actually, I'm looking back. We're at a 1-year high in the implied inflation break even 5 years out. Because if I'm long the long end, I don't want a soft Fed. I want a tight Fed.
Right. Right. Okay. So that's an interesting observation. This was the day in TLT. I mean, there was no confidence in the bond market that day. It rallied since, but this was the reaction on the Fed day. Why don't we wrap it with the dollar here, Peter?
So I think it's important to, and I've always said this, that we talk about the dollar and homogeneously it's either up or it's either down.
Yeah.
Uh, and the strength has really been against the yen, the euro, and the pound. You look at its and putting aside, the Turkish lira, for example,
Okay.
or even the Chinese yuan. You look at the Mexican peso.
You're
I
right.
mean, talk about a strong currency.
Yeah.
So if I look at the DXY, I can see, yeah, the dollar's trading okay, even though it's really in a trading range. If I look at the
Right.
Mexican peso, I see, wow, the dollar trades like crap.
Yeah.
So you have to be really just more discerning in what you compare the dollar to. If you look
Great
at the
point.
dollar versus the US dollar versus the Canadian dollar, the Canadian dollar has been trading in a range for years now. So the dollar
Yeah.
is neither strong nor weak against the Canadian dollar. Just it's been in a range. Um,
Okay.
so it's important to really say, okay, yeah, the dollar's been strong against the yen, but it really has more to do with BOJ policy than anything. Um, you look at the euro, yeah, for years we've been trading in a 105, 115 range in the euro. So the
Right.
dollar's no great shakes here when you look at
Okay.
the issues and challenges that some of these other countries face
Well, being
compared
a
to us.
commodity bull, I would think that you might be looking for a spot to buy the commodity currencies like Aussie. Maybe, maybe you could get it down here. Would you be interested in any fiat? I mean, Mexico, I don't know how the real has been acting, but does Australia interest you since they are
Yeah, at
pretty
these
much,
levels, no doubt. I mean, the Aussie dollar is trading, sort of constantly is in this tug of war between, commodity prices on one hand, but now uh, trading with the sort of the attitude towards the Chinese economy and its weakness. So it's right now it's getting tugged in either direction. I do think with the Chinese economy that um, they're dealing with the residential mess that's on their
yeah,
hands.
yeah.
And if you do get this global manufacturing restock, Chinese manufacturing will recover as well. And that combined with some life being seen with the Chinese consumer that, um, the Chinese economy may be okay. And that could help the Aussie dollar along with the rising commodity prices. So to me, the
I
Aussie
wouldn't
dollar is
be,
pretty intriguing here.
okay. Here's a Nikkei. I wouldn't be long Nikkei anymore. I wanted to just bring up one of the most benign parts of commodity inflation over the last couple of years since the invasion of um, Russia into Ukraine has been the grain complex. And they've been under, a lot of pressure for quite some time, and they're showing signs of a bottom. When we don't have a lot of carryover in any of these, and I remember being, across the street from the Board of Trade when they used to say beans in the teens. But if we have a bad crop and uh, grains start to go, that could really add jet fuel to the commodity argument, not just things like cocoa, but
So, yeah,
yeah.
I agree. So about a month ago, so we were on the fertilizer stocks
Okay.
going into the Russian invasion of Ukraine, obviously not
Right.
having any idea that was going to happen, and that was not why we were long it. But on that spike, we sold. And about a month ago, I was looking at the spec non-spec, or I should say spec non-commercial positioning in corn and soybean futures. And
Okay.
about a month ago, they hit a record high short.
Okay.
And I said, and that was when corn was around 4 and soybeans were around 11-ish.
How are
And
you going to play it? How you're
so
not going to
we
buy.
so we bought fertilizers. Fertilizer stocks have fallen 50% from that Russian invasion spike. So after seeing that futures data and seeing how much prices have come in, we bought back some our fertilizer stocks
Okay.
as a play
All
on
right.
ag.
I tell you that's I don't think we left anything out today, Peter. And if you want to know about what Peter's thinking, besides every 3 4 months when he's here edifying our community, it's free. Just sign up here. The book report. It's on Substack. You could
Can I
find
throw
it.
you one more commodity, Dale?
Oh, sure. What do you want to talk
So
about?
natural gas prices have tanked,
Oh, yeah, you're right.
and I'm watching every week the rig count, and the drillers are laying down rigs, and they continue to lay down rigs.
Okay.
So I would have my eye on natural gas prices. Um, I'm just looking at
The
the
stocks look much better than the commodity.
yeah
I
they
look
have
at some
yep
because we're at historic lows here right now, and the stocks are not making new lows with nat gas. So I think that's a bullish sign when the equity of a commodity is outperforming the commodity.
yeah.
Do you
So a year
agree?
ago, yes, 100%. So a year ago, the rig count for natural gas, so call it in March of 2023, was about 160 rigs. Now you're
Yeah.
down to 112. 112 was the lowest since January 2022. So
Wow.
you're to call it a 26-month low in rig count. And so I would just keep our eye. I'm not trying to pick a bottom here in nat gas. I'm just saying that I think low prices are in the process of curing low prices.
Right. Just like high prices do sometimes.
Yeah, so
Like
I
people
would
were
keep
talking
my eye on
about
nat gas.
yeah, like uranium. you know, everyone was saying there was no supply, and then there was a correction in uranium. So,
Right.
uh, great eye, Peter. I tell you what, you really, uh, Peter. I'm a fan of Peter's, so go ahead and subscribe.
Thank you, Dale.
He not only, you know, he not only helps institutions, it's going to help you as a trader to have Peter's narratives of what he's looking at, in my extremely accurate and humble opinion.
Thank you,
So,
Dale.
Peter, my trading warrior brother, we've been talking for years. I want to thank you for coming here and edifying the face community all that time.
I appreciate having me on.
All right, Peter Boockvar, everyone. Follow him on X at @PBoockvar. And that's a wrap. You could join the team in 15 minutes on the morning edge. Adios, everyone. Get ready. You had the lunar eclipse, and get ready for that solar eclipse. Hey, Peter, you still there? No, he's gone. Anyway, I'll see you, everyone. Good hunting. Yeah, Peter's great. All right. Thanks, Barry. See you, Patrick. You're welcome. Don't just count your pips, count your blessings.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.